Good evening, friends. Welcome back to my channel, Smart Index Edge. I'm Nalnakshi Swami, analyzing the market, Nifty 50 index. Actually, for an option buyer, the market is not giving any opportunity to trade. It was very difficult for any option buyer because the range was very narrow. If you see this candle, yesterday's candle, if I measure this from here to here, it was 115 points. Today, it was still less. It was only 101 points. It was so choppy. You wouldn't have traded in this because the market is in a range. You can see it as a range. After the gap up, the market consolidating within this range actually, and it is trying to move step by step towards the upper side. So since the price range is within this equal range, almost equal range, and yesterday was a dozy, and today it has not broken this low of this dozy. The low made was 24,950 and today's low was 24,940. The price action is like a range actually. So when there is a range, what I do is I take the pitchfork because it is an equal leg. If I apply the pitchfork here, from here to here, I'm anchoring to this low to this. So it is below the median line. So unless it crosses 25,141, the market cannot go and cross the level to another level of 25,300 and 25,000. It can go 25,598. So still below the median line, but it has made an attempt to reach the median line, tested this median line, and again came back and tested the lower level of the pitchfork. And now it is within this second border. Now it is consolidating any more tomorrow towards the upside, and if it breaks the median channel, that means it has to go above the 25,141, then it will be a very positive move. That means a range, higher high will be formed in the market. It should not go and cross this. It has to close. It has to close above this. So for tomorrow, it may be another day of consolidation within the range. So the next level to watch out for 24,975, and market may trade within this range. Market can expand from 24,975 to 25,141 or little bit beneath that. So now VIX is very low. VIX is very low. That's why option premium pricing is very, very less. 10.36 VIX reading. Based on the India VIX reading, daily high to be 25,141 and daily low to be 24,869. It should not break below this low. The market should not come below this low, break below this low, If it starts coming down, again lower levels can be seen in the market, that is 24,869. So tomorrow's price action is very dicey, and also it is Friday. Friday is the last working day of this week, and another 2 days will be there for the expiry. Time decay will happen, and the market will finally come to the expiry. That is Monday and Tuesday. So the price action is very, very dicey, very narrow, very choppy. Nobody can trade in this. Either as an option buyer, it is very hard to trade. Let me go to the very 5 minutes time frame and show you the option for the option buyer. The 25, yesterday I mentioned to keep 25,000 call option in the watch list. This call option, it gave discount around 10 a.m. and also another double bottom it made. Only after making double bottom, it came around 98 rupees, 98.8, and then it rallied up to 126. That was a good opportunity to enter. For that, you need mastery. You need mastery, and in this down move, the put option, 24,900 put option, came down to 90 rupees and 89 or something, and then it gave a very good move from 89.90 to 146. So for tomorrow, since the range is within this boundary, and if the market is going to expand from here, the same call option 25,000 call option, you can keep it in your watch list, and same put option 24,900 put option, you can keep it in your watch list. Let me enable the chart of the call option and the put option to show it to you. See, let me remove the drawings. See, it was so choppy. You can see how much it is choppy. Only here it gave around 97, 95.85, and then it rallied, and it was in a narrow range within this. Nobody could have traded. Only this was the opportunity. This leg was the opportunity. It was a momentous trade for an option buyer from 11:45 to it extended up to 12:30. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles. 55 minutes of trading the market gave. Later it has gone sideways. It has again consolidated. So tomorrow, if it starts moving higher, this call option can expand. This can expand, or if it starts coming down, it can give you discount also. And if you see the put option has slowly and steadily losing its premium. Yesterday it was here. It was in this area. It gapped down below this. You can see it had closed around 121 or something. It gapped down to, you can see 102. From 102, it was an opportunity for an option buyer, put option buyer from 102 to 126. That is nearly 24 points you could have traded. Later, it was a downfall, and even though the premium has decayed so much, it has come down to 86 and 89. Actually, if the market shows any dip or anything, this put option can rise little bit from 86 to 101, or it can lose its premium and it can even go down to 66 rupees. So you can keep 24,900 put option, or this is, sorry, I'm sorry, this is 25,050 put option. This 25,050 put option has already lost its value, so much of value, and 25,000 call option still having value in this. 121, it has got value, it has lost everything. Actually, only time value is there for this put option. 50 rupees is the time, intrinsic value. There is no, that is the intrinsic value. Some 50 rupees or something, 40 rupees. Other things are the time value. If it starts losing time-wise, it can become zero also. So market is consolidating within the range. So these are the two option prices. Option premiums, you can keep it 25,050 put option and 25,000 call option. You can keep it in your watch list, or you can slightly shift to 25,100 put option or 25,200 put option. You can keep all these series in your watch list and you can watch and how the price action will be there. Since the price action is very narrow and it has gone sideways and it is compressed compared to the previous day, it is a narrow range. So you can consider it as a narrow range candle formation. Again, you can anticipate for expansion, either down or up. Most probably, the price action is suggesting we can see expansion to the upside above this level, 25,055, and it can reach 25,141. But if it gaps up, we cannot do anything. We cannot do anything. Price option premium will get, expensive, then it is not wise to enter. Then you need to wait for the discount price and then enter a reasonable price for the call option or anything. Suppose if the market gaps up above this level, 25,054 to the 25,080, say for example 25,080, this call option 120, what is the call option? 121, some 80 points, it can gap up to 160. It can go up to 160 or 150. So then you need to wait for the discount, and if it holds the level, then you can trade for the call option. This is how you need to trade. So friends, note down the levels, and the bias is bullish unless it breaks below this level. That is 24,917. There is no bearishness in the market. There is no bearishness in the market. You can see the market has not made this low. It has held this low, and this is the low of the previous day and today's low. 24,939 and 24,918, and any dip towards the 974, you may get a discount. If it gaps up, there will be no trade. So the price action, even though it is congested, it is a huge big bar and it has taken discount and it is trading, going time-wise correction it is making. So probably you may get an expansion tomorrow since it was a narrow range. Even after the gap up, it was a narrow trading this one. So you can anticipate for an expansion to the upside, most probably with the bullish bias. So you have to think it for a bullish bias. Market has consolidated and it has formed a W pattern over here, and then it is a consolidation and it can continue to the upside. Suppose if we consider this, the trend can expand from here to here. If I take the fib tool, let me do it, apply default setting, then 1.618 comes to 25,112. You can anticipate for the up move in the market. And the next level, VIX level, is at 25,141. You can see expansion. Hope, let us retailers should hope for a decent opening and a decent up move, gradual up move, so that retailers will get chance to trade in the option buying. The retailers can have a chance. Otherwise, if it gaps up, no, there is no hope for any trade. When there is a gap up, you will not be left with much price to trade with. Thank you very much, friends. Nalinakshi Swami signing off. I wish you all happy trading day. Happy and profitable trading day.